Welcome everyone to our webinar today about BioCache and why you should invest in BioCache. I will let the team talk about that. Um, for housekeeping sake, you are in a listening only mode. You can send your questions to the chat bot at the bottom. You can also request that I open up your mic if you want to ask directly. The whole team is here, and so I'm sure they can answer any question that you might have for the session today. Um, I think I'm whiling away time, to be honest, because people kind of trickle in slowly. So these are my housekeeping rules. If you miss, it's okay. We will run a few polls before we start so we get a lay of the land, and so we know how much jargon we can throw in. I mean, it's very easy for me to throw jargon, and I'm not sure about you, Carl, and the rest of the BioCache team, but I sometimes forget that I live in this world and it's all in my head. So just be mindful of that.
Cool.
Cool. So we're 3 minutes in, and with that, we can start the webinar. Welcome, everybody. I'm Khushboo Jha. I'm the CEO of BuyProperly. We are a platform for private market investing. And private market investments are things like real estate, which you will see all over our website, private equity, and private credit, like BioCache. And what we let people do is get access to these investments, which are very promising, but are usually not available to regular retail investors, as it was not available to me when I was working a regular tech job. So that's what the platform does. The investing process itself is super simple. You go, you browse like you are used to browsing on Amazon. You browse, you like something, you click, fill out your details, fill out your address. Again, everything pretty much like Amazon. Click, 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 sign some documents, and you're done. And you can transfer the money, get the share certificates, and you are good to go. You can track those investments in your dashboard all the time. We issue tax slips, tax season. So we issue tax slips. One important reminder, BioCache does accept registered funds towards this investment. So if you are looking to max out your RRSP, and typically after 15th of Feb is when that happens. At least that was my case. When people did the calculation and said, hey, I didn't use my room. Or if you're looking to use TFSA, this investment will fit that criteria. With that, I would like to bring along the team. So welcome Carl and the BioCache team. I will let you all introduce. Carl is the CEO and founder of BioCache. I think there are a lot of great things to say about Carl. I will start by saying he's an accountant. So everything he says, remember he's an accountant, so he's probably being conservative, cautious, and technically accurate. Uh, he obviously has trained as a general accountant, but also has an MBA in marketing and strategy from Schulich. He has more than 30 years of experience in healthcare as an analyst, as a marketer, and as an executive. He's worked at Medexus, Mount Sinai. He's well entrenched in this industry, and so it's an obvious path for him to launch a business in the space that is very familiar with both the pain points as well as the decision makers. I'm making an assumption there. And if you ever have a question on what Carl is like a person on execution, a quick trivia: he's a marathon runner and an Ironman triathlete. So from my side, that's enough proof of somebody's resilience and making things happen. And with that, I would like to turn it over to Carl and the rest of the BioCache team to introduce themselves. Carl, over to you.
Thanks very much, Khushboo. I have so little to add to that. And it's very nice to be in an environment where being an accountant is actually perceived as a positive. We're not always welcome at parties, as you're probably aware. But no, it's a pleasure to be here. I think the background in both finance and marketing and strategy has proven to be very helpful. Finance is one of those things you learn earlier in your career and you think, I'm never going to use this again, but you use it every day. And particularly as somebody running a startup, it's a big deal. And Medexus that you mentioned, Khushboo, is another startup company. It's now traded on the TSX. We grew that quite rapidly, and I certainly have the same vision for BioCache. But that is enough about me. I'm going to pass the microphone, I think, to Fatma.
Hi, good afternoon, everyone. My name is Fatma Baig. I've joined the BioCache team to do the business development, mainly for clinical. So my background is actually as an MLT. And I went and dove right into industry serving the lab many, many moons ago. And I've been rotating and visiting a lot of the main hospital sites where pathology is happening. And that's how Carl and I originally met. He was one of my customers and he had this fantastic idea. And that idea is actually transformed into something else. And it's right on point in terms of the gaps. So as Khushboo mentioned earlier, when it comes to figuring out how to maneuver within the individual ecosystems that are hospitals, it's not that easy. And that's why he wanted to bring on someone who's done it before and spoken to the pathology lab. So that's my main goal, is to do the clinical business development there. And I've never mentioned my title. So the Director of Clinical Strategy. So that's me, and I hope to take it to the next level.
Well, I'm only going to add a couple of words there. So as much as Fatima has been a part-time consultant for us for a while, she just joined us full-time last week. And the actual hiring of Fatma and Justin, who you're going to hear from next, is actually part of this raise. So we've completed part of the raise. We'll talk more about that later. But key was getting business development resources on deck, and you're looking at the two key players right here. Fatma also mentioned she's an MLT. She's a medical lab technologist. It's a very stringent and difficult certification to get, but she's living proof it can be done. But with that, maybe Justin.
Thanks, Carl. Good afternoon, everyone. I'm Justin Grant. I'm a PhD in pharmaceutical sciences from U of T, and also an MBA from Rotman School of Management. I spent 12 years at UHN as a staff scientist, running the STAR Innovation Center. It's a large imaging and pathology research center that helps academics, industry, biotech companies, big pharma bring innovations and get proof of concept data, and also helps translate into the clinical environment. And that's where I met Carl. We had lots of collaborative projects while he was at Mount Sinai and I was at UHN. And we saw how we have ability to work well together to take innovations and run them through hospital systems and really advance technologies to help impact healthcare. So that's why I've joined BioCache, and together we've been working together, forming partnerships with hospitals and working with biotech companies.
Excellent. Thank you, Justin. What Justin is very politely stepping around was when I was running the private lab, the commercial lab at Mount Sinai, and he was running the commercial lab at UHN, sort of almost frenemies, right? Because the two compete, but actually I think if they were different people running them, they probably would be more aggressive competition, but we collaborated extremely well. And we had a friendship that started then, it's continued to today. And speaking of long-term friendships, I've known Mark for 10 years. Mark is our chief of staff. He's also our chief privacy and security officer. He has a very impressive background in startups, both fintech and healthcare. But Mark, I'm not doing you any justice. Take it away.
No, I get it. Yeah, well, pleasure to meet everybody. Thank you for putting your time aside for us. Yeah, I mean, I've been working with Carl since the beginning of BioCache, and it's been a great journey so far. We are definitely textbook startup, and it's it's going quite well. My role here, as Carl said, is chief of staff. However, I like to look upon myself as the person that sort of applies the glue and attaches everything together here, right? It's all about scaling and operations, and then of course working with both Justin and Fatima on the marketing and sales aspect of things. And yeah, there's lots to do every day. As I said to Carl earlier, there's a different hat at every given moment. Anyway, thank you.
Them all well, Mark. All right, that's the team.
Awesome. And before we move further, I hope you guys can see the poll on the screen. So we know, can you guys see? I don't see anything coming in. Oh, I see one, somebody.
Oh, the polls.
There's a poll to ask, are you from the healthcare or adjacent sector? Super important. It's a sector that's a very different beast from every other sector that's in the news all the time. I think my dad's a doctor, so I spend a lot of time in and out of hospitals and that industry, like just hanging out with lab people and spending time waiting for my dad there, sort of thing. But it's just very hard if you're not in the industry to understand all of the complexities. It's not just change and the standard human behavior and all of those things. It's just so much risk and detail orientation required in that industry. I'm glad there are few people who are familiar. I think we've waited a minute, so I'll just publish the result. I'm hoping you guys can see. And then there's one more that I would like to, let me publish the result for this one also. So, have you invested in a private company before? I don't think everybody voted, but that's okay. Seems 50-50. And familiarity with healthcare seems okay. So nobody says yes. Everybody says no. That's kind of the outcome. 100% is a no. So now that we have that out of the way, you guys know what to expect when I ask the questions for you. So why don't we start there? So tell me, Carl, what is BioCache and what exactly do you do? I mean, healthcare is a very broad thing, but what part of that overall value chain, wellness and care are you in? And since the audience is entirely non-healthcare, it's just hopefully help us understand what you do.
No, absolutely. So BioCache has built an entire organization and our vision around a common thread that weaves between clinical care, which is what happens if you go into a hospital. They look after you, they treat you, they send you on your way, or if you're involved in research. So between those two, those are the two big buckets broadly in healthcare. And the common thread that we have tacked onto, nobody else has tacked onto, it's proving to be very relevant to our audience, and that is what we call biospecimens. So a biospecimen is any specimen or sample that is taken from a patient or a subject in a study in the course of providing them care. So if you think of going into the hospital to get surgery, typically in surgery, they take biopsies. They'll take a biopsy before the procedure, they'll take one during, and they quite often take one after. If you're talking about oncology, they will take multiple biopsies. It can be over 100 for a surgical procedure. Those are all biospecimens. They're tiny little pieces of tissue. Those pieces of tissue are then cut into what we call tissue blocks and cartridges, and then cut again into glass slides. And glass slides can be read by a pathologist, but the world is changing there. This is being done now more and more on computer screens, so they're doing what's called digital pathology. That is a major source of revenue for us, is storing those tissue blocks and glass slides, and then also digitizing them for customers. But biospecimens don't stop there. Those are very important because in the province of Ontario, every hospital has to keep those biospecimens for 20 years. You think about your tax records that have to be retained for 7 years. Hospitals have to keep those for 20, and that's for adult patients. For pediatric patients, it's 50 years. And you think about this as being like a library, what they have to maintain to keep track of all of those. It's enormous. Think about 262 odd surgical days a year. Think about anywhere between 500 to 2,000 specimens harvested in a given surgical day. And then multiply that by 20 years, and you get an enormous number of specimens. These things are a bookkeeping nightmare for the hospitals because they have to keep track of these and they need to be able to retrieve them. But retrievals take a long time. We did a retrieval for our one hospital in Hamilton a week and a half ago. We had it from the time they asked for it, we had it on their desk an hour and a half later. Like, we're fast, we're very effective, and we don't lose things. So the hospitals have a big problem with shrinkage and losing these things. So that is one type of specimen. What you're seeing more now too is as those slides get digitized, they create these digital files. Those digital files are quite enormous. They're static. They're not video files, but they can be up to 8 to 10 gigabytes per file. Hospitals are all switching from glass to digital, but their data requirements are enormous. So now those image files are also specimens and they need a place to put those. Additionally, if you look at genetics, we have a geneticist, a molecular geneticist is our chief operating officer. George is not with us today. When you do a DNA sample, which you can take off of a glass slide or you can take it from blood, that extracted DNA has to be stored somewhere, and it's typically stored at -80 in a -80 freezer. We have the capacity here to do that and to do that to a very high standard. In fact, we're doing that today for London Health Sciences. So that's another type of specimen. And then you can get into blood, you can get into whole blood, spun blood, plasma, that type of thing. But the bread and butter for us, probably a terrible choice of words, but the core business for us is managing that first group. It's the extracted DNA, it is the tissue blocks, the slides, and those lead to all kinds of business opportunities. We're chasing a few of them, which we'll share with you. But there are multiple ones. So in terms of where we can go as we grow, we've got lots of choices. And so far, nobody's followed us, but we're not counting on that being that way forever.
So I will ask two rather naive questions. One clarification. One, when you say retrieval of the specimen, you're talking about actually getting the physical tissue cells over to somebody's physical desk?
Yes, that's correct. So in that case, they were looking for a series of blocks, which Mark and Dr. Camilleri, who also works for us, she's on vacation right now, but Mark and Dr. Camilleri pulled that in about 15 minutes, got it in the car, we drove it right there and physically dropped it on the desk of the pathology admin at St. Joe's.
Got it. Sorry, I come from the tech world, and when you say data and dropping, I only imagine you pulled data through an ETL query, and then you put it in somebody's Excel or something for analyses, and that's the only thing I imagine is like data and metadata. So just needed to clarify that one.
Yep.
And you alluded to, yes, sorry.
For just so that there's a reference point as to why what Carl mentioned is so important. Just the standard of this practice currently being done, if you're using an offsite storage, can take weeks. So the fact that it happens same day is revolutionary for this space and ultimately patient care. So that, it takes time for the pathologist to read things, but this speeds up that whole process. We've all been a part of this healthcare. There's constantly clogs along the way. So we're definitely positioning ourselves to unclog some of these processes.
Got it. Now that I think about it, if you take weeks just to figure out what's in my tissue, I might be dead by the time you read the results. Weeks is a very long time.
This is so true. There are some very fast-moving cancers where they need a baseline and they need it quickly. And if, where these things are stored now, they're typically the very old ones. They store them off-site, but they're in document storage companies. Document storage companies are terrible at managing these things, so they do take forever. And quite often, they'll take 3 weeks, and then they'll report back to the hospital and say, well, we took 3 weeks and we couldn't find it. That's a big problem.
Right.
And here's a bill.
And here's your bill, by the way.
Yeah. For us looking and losing yours.
What are you guys doing different than what's been done in the past? and why nobody did it so far?
Yeah, so good question. If you look at companies, the document storage companies that do take this stuff on, they are document storage companies. They are staffed by people who aren't trained in healthcare. If they need any work or manipulation done on the specimen or any problem solving to be done, which is quite often the case, these people can't do it. And also, the hospitals, most of the hospitals in Canada and in the United States are accredited under a group called the College of American Pathologists. And that is basically a group, it's like the Good Housekeeping Seal of Approval. They provide a blessing to the organization in writing. It's like an ISO certification. And the problem that they have with these other storage companies is if they use them at all, they are not CAP credited, and they will actually threaten their CAP accreditation on that part of the hospital lab. They quite often choose not to accredit the specimen storage area. That's what the hospitals decide. But they all want it. They all want to send their materials to a place that is accredited and understands that. We offer that. Now, we are accredited by a group called the Canadian Tissue Repository Network. So very high standards. They accredited us, certified us in April of last year. And we're undergoing inspection for the College of American Pathologists in Q2 this year. We're all very excited about that.
So there is almost a regulatory or a license mode. So if you do get accredited, then you have a status that just has a long lead time for anybody to catch up on.
Correct. So they're already going to be up against that.
Or at a company level, though?
Sorry, say that again, Khushboo?
Is that by facility or is it at a company level?
That is at a company level, and then you designate sites. So if we open a separate site, just saying, we would have an inspection, but they would be included under our license.
Got it. Cool. Okay, so that's what you guys do. Wow, fascinating. I only knew data retrieval, like I said. This is a new level of retrieval. Bringing me to the other big question, which is the investment. So I'm trying to get those two things up front before we get into a lot of details.
Yeah.
What is the investment? What exactly am I giving you my money for, Carl? And how does the math, like how much money will you double my money, quadruple my money? Like how does that math work? What am I doing when I give you the money? What do I get in return as an investor? And how does it play out, assuming that your forecasts and assumptions are spot on?
Right. Well, Khushboo, remember, you just threw that ball to an accountant, so you're going to get an accountant's answer.
Okay.
So,
I'm very excited of investing with accountants. I've had good luck with them so far.
Okay. Well, I can tell you that what we're doing is we're taking 50% of the money that we bring in, and we're putting it into things that work already, like things we know that we want to accelerate. And then we're putting 50% into new things. And, you know, when we go through the presentation, we talk more about it. I can explain what those things are. But how it breaks out is, you know, there's a part of this that's business development. And the business development is a lot of what you see on your screen here, which is Fatma and Justin. I mean, these are full-time professionals with impressive Rolodexes that are trained in the deadly art of getting hospitals to separate with their money, which for us is a really important part, obviously, of what we do. So a big part of the raise is going into that. There's also a portion that is going into our IT infrastructure. We have a very strong IT infrastructure. Justin has already been approached by somebody who wants to license our IT software, which was custom developed by a hospital developer here in Toronto. But it's very smart because there's nothing else like it on the market. It's smart, but it's a foundation. And I would love to expand it to make it more interactive for our clients. That costs money. That's they don't do that for free. And then we're also acquiring and replacing some assets. So Mark has replaced our generator around the side of the house or the side of the building. So we have a backup generator in case power goes down. For our hospitals, we can provide continuity. So we've got a new generator, which is great. We're putting some money into working capital, not a ton. also putting some money into debt retirement. So the Business Development Bank of Canada likes us very much. They moved us through very rapidly and said, oh, here's all this money, which we said, great, except we're paying 12.5% on that money. So if we can get a favorable differential off the raise, which is part of where our interest rate on the convertible debentures comes from, we would use some of that to pay down part of our loan. It's a long-term loan. We've got years to pay it back, but it would be nice just to get that off the books. We also have a lease, which we may want to buy out. So we have a lease on a digital scanner, and that's a device that takes the glass slides and turns them into those high-resolution images for our clients. We still have about $100,000 to go on that lease, so we would apply some of it against that. And then the rest of it really is, there's a new venture that we're going to be talking a little bit more about, which is getting involved in clinical testing. We've been invited to sit at a table, which is pretty exclusive, but it's a $4 billion a month or $4 billion a year market in the province of Ontario, and basically closed off to hospitals only. But we've been invited to that. So that actually requires a bit of capital to get involved in. We have other ways we can play in that market, but it makes sense to use some of the proceeds from the raise. But that's really, those are the big buckets, Khushboo, for where the funds are going.
Got it. So another way, I'm investing, and there's some projections and returns. If I give you $100 today,
Right.
run the operations, what do I get and when? And when do I start giving them my money?
Right. Well, because it's a convertible debenture and we're paying interest on a quarterly basis, you're going to see 10% divided by 4, so 2.5% of your investment come back every 3 months. So that's paid within 30 days of the end of the quarter. I have a lawyer that will beat me up if I don't pay that out right away.
So does it start now, or does it start after a certain time? Like if I give you money this week, when do I get my first money back?
Yeah, great question. So officially our raise closes on March 31st, but if we do a decent amount of, we bring in a decent amount of capital before the end of February, I will start the meter running on March 1st. And that basically means you've got March, April, May, and then I'll pay you in June, your 2.5%. But, you know, we have been pretty conservative in our revenue assumptions. And if you play the model out, 3 to 4 years, what we're really trying to get to, and I think we're actually going to do better than this, but what our goal is to get to $3 after 3 years. So right now our share price, when people got in originally, was $1. The conversion price or the strike price on the convertibles is $1.50. So that's double in 3 years. And to be quite frank, I think this has a lot more potential than that. I'm going to share one opportunity with you today that isn't even in those numbers. And we are all interested, all of us, in a liquidity event. So when I was part of Medexus, they did an RTO after a period of years. And, next thing you know, they're traded on the TSX. We have one partner who has expressed an interest in doing that with us. I don't think that's bad news to anybody on this call. We also get approached periodically by companies that just maybe want to get us out of the way, I'm not sure, but have said, we'd be interested in talking to you about acquisition. So the ink isn't dry on whether we do an RTO or whether we do a takeout, whether there's an option where somebody comes along and buys us out. But all of these decisions we make with our board consults our shareholders. We have a very efficient management mechanism. We communicate regularly with all of our shareholders. And, decisions like that are going to come down to money. What is the expected valuation on an RTO? That's always a bit of a risk because you don't know until it actually happens. But if it's a takeover and they say we're going to give you $6 a share, then that's money in the bank. We bring that back to everybody and say, are you guys okay with this? But no, that is also a very likely outcome. We're in a hot space here. There is no question about it.
Got it. Yeah, coming back to how much money will you make me, and if you have a slide on that one, that would be great. I understand that as far as exit scenario is concerned, at the end of 3 years, majority of the startups, statistically speaking, go down the M&A route, and so like some shut, some IPO, but majority is M&A. So probabilistically speaking, just based on historical data, independent of which company you are, that is the most likely probability scenario. So let's just assume that might be the path. But if that's not the path and you're still growing at the end of 3 years,
Right.
What's my most likely scenario for the $100 I gave you today, or 150? Because I'll keep the math simple. So if it's $1.50 a share, so it's like 150. What does that mean after 3 years?
So I think what's going to happen, it's our challenge to make everybody look at what we're doing and say, actually, we don't want our money back. We want to convert. We want to convert it to $1.50, right? So that's going to get you, 66 shares if it was a $100 investment, right? And that's what we want to do. If you don't want to do that, the way the convertible debentures are structured, after 3 years has lapsed, you can make a call. If you just want your money back, you get your money back. It's that.
So I may get into your upside by converting into equity if I think your price is worth more than $1.50, or I can say, just give me back my $150, and I have already got the distribution for all of those 3 years, which is 12 quarters, basically.
Correct. We have several of our investors are actually accredited. And one of them has been really a good friend and an ally, and he has sort of helped create this program. And all the features of the instrument that we're talking about really came from him, not from me. So I take no credit for those. But yeah, absolutely. It puts you as an investor in a really good position because you're guaranteed your 2.5% every quarter. But if things really, really heat up and you're like, okay, well, I just want to get in, you can convert. Anytime, actually. I think it's after 60 days after the initial investment. If you decide you want to convert, you can do that. But when you convert, you don't get the interest payments anymore. So it does put a lot of control into the investor's hands. And the other thing I will say about this, it's not part of the legal agreement, but it's just part of our commitment. Anytime investors want to see things, they want to come by, they want to have a conversation, they want to understand more, our doors are open. And we've never made any efforts to dissuade that type of questioning or interest.
Yeah, super cool. That's promising. If you could also tell us a little bit about where you are and where do you see most of the growth coming from over the next 3 years. So just a quick recap of the past 2 years, and what are the big growth drivers that you think will make you the most money? I know there are a lot of potentials with data. I'm like a big AI person, so I always see AI and data. You tell me data, I see AI. Every time you say data, I see AI. Every time I see agents that can do stuff. They can, like, why do you have to do anything? I can build an agent. You help me build the agent. So that I definitely is going to be massive. But like in your 3-year scenario, what are the big revenue drivers and how what contracts, what pipelines, just a little bit.
No, absolutely. Well, I mean, on the surface, we store specimens and, we've got a big warehouse full of them and all the rest of it. And that is on the surface. Underneath this, we are a data company. And I can say that to this group because all those specimens in the years to come, many of them will just be digitized and they need to be stored. Those are very, very, very useful. It doesn't matter whether they come from research or they come from clinical care. We have a slide to show you. We've not actually talked to investors about this part before. This has always been sort of quiet, but you basically accumulate what in the data science world they call a data lake. You've got a massive lake of data. It's all very well annotated and characterized. It's characterized by experts. So you've got an image, of a cancer tumor, like a lung cancer tumor, 36-year-old male, that type of thing. It's all beautifully characterized. That information is of great interest to industry. They can't, you can't just go out and get that information. That's why they spend like billions of dollars on clinical trials, because they need that information. You can sell that information to industry. That is not a core part of our business model today, but that is something we're talking to Fasken about right now, because we know navigate consent. Consent is a big block to that. But when you get onto the other side of that and you can make some of your specimens available commercially, you can inform AI algorithms, can be used as reference data, can be used for clinical trial validation tools, can be used for a number of other instruments. That is not part of any of the numbers we're talking to you about today. That is a big deal. And as I say, we've not talked to investors about that before because it's always been step two. In the meantime, Khushboo, what's driving our growth is, yes, it is specimens, but specimens also give us the permission to talk to these hospitals about data, which is what they really need to store. So right now we're doing that through third party. We're using a company that is already used by 3 levels of government in Canada. They've come to us and said, we would really like you to represent us with hospitals. So we can store that data through them. And over time, we can build up our own infrastructure to store cloud data as well. But in the meantime, partnership was a strategic decision on our part, and it's a good decision. These guys are validated, they're bulletproof. Well, never want to say unhackable, but they're as close as you're going to get. And this is actually really good for us too, because now with the tariffs that are being imposed between the US and Canada, a lot of the hospitals historically were using the groups out of the States. So like Microsoft Azure, AWS, Google Cloud. And now the federal government has said in a lot of their ministries, no more. You need to find Canadian vendors who can provide security and reliability. So you just took a couple of the big players right off the board. And you've opened up the market for a company like, well, it's not even a little company we're partnered with. They're a multi-million-dollar company. So that is an area of expansion for us. Justin's area, which is research services, is already growing nicely. And the new area that we're moving into, that clinical testing pool I referenced a little while ago, the $4 billion a year pool in Ontario, since we've been given a seat at that table, there will be some pretty decent growth there too. Our challenge is always not to have too many squirrel moments where we're sort of looking, we're going to go over there, we're going to go over there. Everything has to fit with our core proposition, which is all around management of biological assets. And we can only grow steadily from there. And we don't want to grow and offer too many services too soon. But it's a balancing act, as you can imagine.
Yes, super cool. So who do you compete with, Carl? I know there's, like, you guys are ahead of the pack and make it faster, but I'm sure there are entrenched incumbent players that already are doing this. I mean, somebody is dealing with my specimen, and how big are those companies, and how do you, I hope somebody's storing them and dealing with them, and how do you compete against them? Like, what do you compete on? Is it the price? Is it the, because in the real world, efficiency is not enough to move or change behaviors.
Yeah.
So what are the big things you are competing on? Like, what's your unique advantage?
Yeah, so our unique advantage is really is the team and the level of quality and the speed of retrieval, like lightning, faster than they can retrieve from their own facility. That's how fast we can retrieve. If it's digital, it's lightning fast. So we can take a glass specimen out of the back, scan it, send it through the cloud. They can have it in less than half an hour, which is pretty well unheard of in the world. But yeah, there is some competitive headwind. There's no question about it. So if you look at the document storage companies that we referenced earlier, they have sort of backed into this market. I have a lot of respect for them. They in many cases do things very well. Iron Mountain specifically has, I think, seen a little of what we're doing, and they're kind of coming to their own conclusion, and they're offering some sort of scanning services for some of their specimens, but they're not staffed by people like we have here, medical lab technologists and clinical pathologists. So the quality of what they're getting is always going to be suspect. We were told, and this is an unvalidated fact, so this is again the accountant talking here, that we are the only commercial -80 facility in the province of Ontario. So if anybody wants to store anything at -80, they've got two choices right now. One is buy another freezer for $25,000, take up 16 square feet of space in their hospital, or B, they try and bum some space off of somebody else in the hospital or the guys across the street or what have you. And so to step in and say, listen, we'll do this for you. It's just like buying server space. Do you want a dedicated freezer, or do you want to use part of one and share them with somebody else? And then work out rates. You know, that is completely unique. Nobody else is doing that. If you get down into the States, it's really interesting. There's a couple of organizations down there that do things similar to us, but not exactly the same. And they don't have the level of teamwork and team accreditation and network that we do. And in some cases, I think there's one in New Jersey, which I'm pretty sure is going to run out of gas before too long, because I think they raised way too much capital and probably made too many promises, and they're probably going to collapse under their own weight. But there's also another group down in Maryland, and there is a group on the Gulf Coast in Texas at last check, but that was like a year and change ago. And they're just kind of bumbling along. I wouldn't say that they've got particularly brilliant managers down there.
Oh, well, those are all my questions, Carl. Anything you and your team would like to add that allows our investors to make better decisions? Are there any specific slides that you think you haven't covered in the conversation? Those slides are available on our website, but if there's something that you would like to highlight.
Well, one thing I would like to highlight, Khushboo, is that storage business. If you think about it from an investment point of view, which again, accountant talking here, they're annuities, right? So when you lock up a client for a contract for multiple years, which is always what we're working towards, can we get them on a 5-year contract? Can we get them on a 10-year contract? You're effectively participating in an annuity. And that means that, yes, very labor intensive in terms of business development resources at the front end of that. But after it's maintained, you obviously have meetings with the clients ongoing, but every month, boom, $6,000, $8,000 gets dropped into your account. And that, as a conservative guy, I really like that. I think that makes for a really smart business arrangement. You know, there are a lot of other sort of short-term things we can do. If we scan, we're working on a project we've quoted now for a hospital in London. They want 30,000 images scanned. So they're going to send us 30,000 slides, and, you know, they want these all digitized. And, you know, our quote for that is basically $250,000. And, you know, that is a one-time thing that will take a few months to do when we dig into that. But that's not an annuity, but it's a nice short-term shot in the arm, and it does wonderful things for the business. So I love the fact that we are sort of a hybrid of these annuity contracts and these near-term contracts, that if we really hustle and we want to raise a bunch of money quickly, we can do that, right? But it's labor intensive, and Justin's area is doing exactly that right now. And, you know, you sign a contract with a research company, like maybe a upstart or startup rather, Biotech, and they'll give us $50,000 right there. Well, we keep part of that, we parcel part of that out to vendors. But in terms of cash flow, it's a really good thing to be able to pull that lever and say, okay, we want to raise a bit more short term, let's put a little more into annuity, that we can have those conversations, and we've got those sort of tools on our dashboard to do that.
Super cool. I have a question here. So it's, I think, from Avi. Thank you, Avi, for the question. Great presentation. Pleasure to hear Carl and team talk about their vision. My question may benefit debt investors on the call. What could potentially go wrong with the investment? Thinking political, procurement, strictly for the debt. And again, it boils down to, when I give you $150, what happens to my money? And it's kind of that risk. Do we have adequate collateral to back the debt position? In short, what would make me not give you my money or
Yeah.
turn back your cash? It all boils down to, we love you, we like your team.
Want our money.
The money. How do I make the money? How do I grow the money? How do you not lose the money?
Yeah. No, it's a very good question, and we have a risk registry that we update fairly regularly on all the things that could go wrong in the business in general. And we don't have a risk registry for this specifically, but I'll talk off the cuff. I mean, in the very unlikely event that we were in any way insolvent, yeah, there is a risk, right? I'd have to look to see where you sit in terms of credit and the order of liquidation. Business Development Bank is pretty insistent on being at the top of the list, which is part of the reason we also want to pay them out. So investors would have access to the proceeds of whatever was left of the business. And we do have assets. So again, we do have a scanner, we have a vehicle, we have computers, we have shelving. All of these things have a value, but I wouldn't really want to sell you on those things, because I don't know that that's a very satisfactory outcome for the investors. I look at it, I don't think there's anything else that comes to mind. And I'm the guy who always finds things to say, oh, this could go wrong. I'm worried about this. Nothing else comes to mind, Khushboo and Avi, that would be a threat to that. But I don't know, does anybody on the team have any thoughts? It's a finance question as much as anything.
Who is on your capital stack, Carl? Like, I know I'm asking off the cuff and comes from Avi's question. You've raised capital, you've built this business. Who else is in the capital stack? So I get the banks will always sit on the top. That's the privilege they have, and that's it's a good thing and a bad thing. It also means, the good thing is it means they did due diligence on you guys and they found you guys respectable enough. And I'm sure you've given your arm and a leg as personal guarantee that they will come take if you don't pay. That part I understand. Who else is on the stack? And
that's it. So
okay,
there is
capitals or funding.
BDC is at the top of the stack. We have a lease on the scanner. It's a $300,000 scanner. I think we still owe $100,000 on that. So, you know, they would fit into that stack as well. They're technically part of our financing. And the rest of the shareholders, as you know, equity shareholders, unfortunately, are sort of at the bottom of the list, right? And stack, but you would actually be ahead of the equity shareholders. So
the other shareholder or the previous funding is equity, which means the convertible note would stand ahead of them. So correct. The only people ahead of us is basically me. Sorry, I'm doing this mentally, but only people ahead of us are the scanner guys and the BDC guys.
Yes, that's correct.
Okay, that's helpful. Thank you.
Any other questions?
That's it. I think I don't see. I think if you guys click on the Q&A, you can see the question actually.
One other point, actually two other points I'm going to make, because I'm just sort of glancing quickly through the deck, Khushboo. One other point that's important is the people that you don't see here today. So there's no question about the qualifications and capabilities of the people you see on our call. One of our co-founders, again, Dr. George Sheramez, is PhD. He's a postdoc from Johns Hopkins in the US, and George and I have been friends for quite a long time. George is part of the organization. Trevor McKee, Dr. Trevor McKee is a PhD from MIT in image analysis. So basically taking data and creating AI algorithms from that. Trevor is also a founder. Trevor is a very intelligent and hardworking guy as well. I'm sorry he's not on the call. Trevor has his fingers in a few pies. George and Trevor are both fractional to us, to be very clear. But we have Dr. Camilleri, who is a licensed pathologist. So she's a veterinary pathologist. So she's a double doctorate degree from the University of Guelph. Very smart, very good experience with digital pathology, handling specimens. When you put people like this on your pitch deck to new clients, it makes it very clear that we've got very good bench strength and we didn't just roll off the turnip truck, right? I always feel a little bit like the drummer in this band because I'm surrounded by people who've got much more impressive qualifications than mine. So the team is very significant, and I'm still holding back a couple of other people. A lady who runs quality for us was from OICR, from the Ontario Institute of Cancer Research. These people, again, they're very impressive in their own right, and they are very committed to what we're doing here. The other point I just wanted to raise very quickly is we have 5,000 square feet of space here, actually just under 5,000. But we also have an option on 10,000 more square feet up in Brampton that is even more secure than our space here. You walk through here, it feels a little bit like walking through a bank because we've got swipe cards and keep track of all these things. We've got high premise and data security. The place up in Brampton is even better. So as we grow, we've got room to grow. And that's been really important to me because I don't want that to be a limitation when Fatma's talking to hospitals, saying, oh, I don't know where we're going to put that. No, we got 10,000 square feet more. And eventually we will buy our own facility and fill that out as well. But for now, everything we're doing is renting. But we do have an option on twice as much space as we have here today. And we can get that on very short notice.
That is awesome. Thank you, Carl. That was very helpful. All right. I don't see any more questions. So we can end the session. Thank you all. I think the quality of the team and the product speaks for itself. It's definitely a space that I have personally looked at before. I love storage solutions of all kinds, this being one of them. And yes, temperature controlled storage is still a gap area, and it's going to be a gap area for a while based on our data analysis, which was one of the reasons we were very excited about this thing. And this is a special niche within that. It's not managing vegetables, so you can't get the temperature off on this one. And so super critical, super niche, and a great team. And excited to see what you guys do over the next few years. Hopefully the investors are just as excited. Thank you.
Hope so. Thank you very much.
Thank you.
Bye, everyone.
Bye.
Goodbye.
Bye.